Okay, so in this video I'm going to be talking about the NQ legacy algorithms and just kind of give you a brief introduction into my company. So we get a lot of questions regarding some of the older algorithms that we used to offer and how they've performed since we capped those. But I'd like to start by just showing you the website so I can kind of show you what I mean. So right now we offer two algorithms, two packages. We offer the Swing Trader and the S&P Crusher. Swing Trader is the more popular package right now, mainly because it's done better, and we have quite a bit of data on this algorithm, a lot of videos. I have one video where I actually recently did it, and we talk about how the Swing Trader is done since going live. But people, rightly so, ask, what about some of the older algorithms that we used to offer, and how are those doing now? With since it's been so long since we offered them or since we capped them, just basically how are they doing, and how would they have done had someone continued trading them? So in order to answer that question, what I'd like to do first is just give you a brief history of the company. So we started in August of 2013, and at that time we offered three algorithms. We called them the NQ Legacy, and these are the three algorithms right here. So we had the 01 overnight breakout, or 01 overnight gap. We had the B1-Breakout, which was a day trade algorithm, and then we had the T1 burst algorithm, which is this one over here. And this is a chart of the NQ, so the NASDAQ Eminis. And at the time, back in August 2013, I actually flew out and would meet with people and would install these algorithms on TradeStation for them. So there are people out there today that still have these algorithms, and as far as I know, still trade them. Some of them I actually still hear from. But we ended up capping this algorithm after about a year of offering it, mainly because the liquidity on the NASDAQ was just smaller, and we didn't want to oversell the product, and so we basically stopped offering it, and that's when we moved to some of the other packages that we offer now. But the question is, how is this algorithm done, or this package done, since I last optimized it? So to answer that question, I just want to pull up this spreadsheet because it kind of shows the hypothetical account walk forward, the blind walk forward results of this package since we last optimized it. The last time it was optimized was back in March of 2014, so about 6 months after we'd started the company. In December of 2013 we traded these algorithms, but they were based off of the QQQ ETF, and so in December of 2014 we added the future side of it so that it would be automated through TradeStation. And we did have a bug early on, and it was fixed in March of 2014. And the bug, all it really did was it would send out multiple orders on the burst algorithm, and it didn't affect any trades because the orders were really far away, and it only happened every once in a while, but it was something that we had to fix. So we fixed it in March of 2014, and that was when these were all last optimized. So since then, since the last optimization, if somebody had a $15,000 account and kept trading all of these algorithms through 2017, the account would be at about 40K right now. So it's about a 25K gain on a 15K account in the hypothetical kind of walk forward models, and because it is walk forward on a hypothetical account, we have to have these disclaimers, so make sure that you can pause the screen and read those if you want to read them more carefully. But it basically means that because it's the hypothetical account that we're taking this data from, we have to include slippage, meaning even though the algorithm says we might have bought it, 4324.5, the actual fill might have been a tick higher than that, or 4324.75. So what we do though to compensate for that is I put in a full tick of slippage per trade round trip all in, and so that helps account for any of those kind of differences that someone might have seen. But what I'd like to do is kind of show you each algorithm, and I'll kind of quickly go through the performance since we last optimized them. Alright, so this is a chart of the NASDAQ with the 01 overnight gap algorithm added to it. What I'm going to do is remove the algorithm just so that you can see this chart of the NASDAQ. But kind of like I said, so this algorithm was originally offered back in August of 2013, which would have been back around in here. I'm sorry, that's 2012, so I guess it would have been, here we go, August 2013, so about right in here. The last time it was optimized, though, was in March of 2014, which would have been right about in here. Okay, so since the last optimization, so we back test from this point all the way back to May 03. But then the question is, how have they done since this point here, since we last did the optimization? And so what I'll do now is I'll go ahead and add the algorithm so that we can kind of take a look at it. So right now TradeStation is populating all the trades, and I'm going to zoom in on a few of them just so you can kind of see what we're looking at. So this is actually 2012, so this would have been back tested. But if I go forward in time until we hit kind of March of 2014, then you'll kind of see some of the trades that it had on a walk forward basis, and we can really pick any point after then to kind of show you. I guess maybe here's a good point to show. So this is the 17th of February in 2016, and the algorithm had a winning trade right here. It bought at 41.78 and it got out 41.89. So that would have been a gain. Here's another gain on the 18th of February, another one on the 19th, and here's a loss right here. So when you see this red dotted line, it shows a loss. But and if I zoom out, you'll see a whole bunch of trades. You'll also see periods where it didn't trade, kind of after some kind of a drop. It'll usually get on the sideline before it gets back in. But the real thing I want to show you, though, is in the performance report, because what TradeStation will do is give you the report for the entire back-tested period plus the kind of the live trades, or I should say the walk forward ones. But to really kind of show you how it's done, I want to show you the equity curve. Because what the equity curve does is it shows all the trades. So here's back in 2001, so this would all be back-tested. And then not until you get into March of 2014 can you start seeing the kind of the live or the walk forward returns. So what this shows is that since we last optimized it, this algorithm has just done the exact same thing it did in the back testing. In other words, if somebody was a customer of ours back in kind of March of 2014, they would have bought this system, we would have loaded it on TradeStation for them, because we didn't have the Fox group back then, or any of the other auto brokers. Then if they would have traded this algorithm, then the returns they would have seen on a hypothetical account at least, and that's including some slippage, so in theory on a live account as well, they would have seen gains pretty much from that point all the way until March of 2016. Then they would have taken some losses, but then it would have taken off again, and the accounts would have been hitting new highs. So the key thing to look at, though, is that the equity curve, you can just tell by looking at this, has matched the back tested, and in fact might even be doing better now, because if you kind of draw a line from this kind of the highs to the highs, right in here it would have kind of outperformed those. So this algorithm has done amazing. So the question is, how have the algorithms done? The old algorithms that we capped, that we don't offer anymore, how have they been doing? And the answer is they've been doing really well. The overnight gap, the one we're looking at now, these are the returns that it's seen, and the returns are about 19,000. But I also want to show you the other ones as well, so you can see with all three combined how they've done. Because when we offered them back, a few years ago, it was all three of these, similar to how the swing trader trades the momentum ES and then the push pull or the treasury note algorithm. this NQ Legacy traded these three algorithms. So let's look at the breakout. So I've shown you the overnight gap, and by the way, the overnight gap is, well, if you look at the momentum algorithm, the one that we offer now for the swing trader, and also it's in the crusher, it trades the momentum ES algorithm, and that's almost not the exact same, but it's very similar to the overnight gap that we used to offer, only it's for the S&P. But let me also show you the breakout algorithm and how it's been doing since the last optimization. So just looking at the last few weeks, you'll see it had a few good trades on the 1st of May. It had a great trade right here. We got in pretty much at the open and got out at the close. Here's a trade where it got stopped out the day before, and then another winning trade on the 25th, another one on the 24th. But if we look at the equity curve for this one, since the last optimization back in March of 2014, right in here, this algorithm has also done good. It's for the most part, it looks a lot like the back tested. So here's all the back tested trades, and after this point here is the kind of walk forward live trades. You'll see it did hit kind of a high point here around July of 2016, and it looks like it's starting to rebound out of that. So in the back testing, you have similar kind of pullbacks that this kind of looks like, and what you see is that after the pullback, it has kept going. So this algorithm has also done good since the last optimization, which would have been kind of right in here. Sorry, I guess right in here. And the account would have been at about 15K, and so it would have made another roughly 7K since then. So this algorithm has also done really well. The only algorithm that hasn't performed as well that was offered in that package is this burst algorithm. Although recently it's been doing a lot better, and there's its equity curve. But if I go to the performance or the periodical returns, you'll see that since November of 2016, it's done really well. It's had gains every month since then. But you'll also see there were a few rough patches where it didn't do as well. Now if we go back to this Excel, you'll kind of see that here. So you'll see this period of where it took losses right in here, and then another period right in here where it took losses. But if you look at all three algorithms combined, because they are designed to trade as a complete system, you'll see that the account, again, it goes from 15K up to about 40K. And I'd be happy to email anyone this this Excel if they'd like to look at it. You know, I think the point of this blog, though, is really just to show how this algorithm has done since the last optimization, how this package has done, and there are people, at least a few that I know of, that are still trading this. But what happened is, as we added new algorithms, and as we, so for example, as we added the Treasury note algorithm, people that were trading only these three algorithms then eventually would kind of move the majority to the newer algorithms. But the point of this is more to show some of the original algorithms that I developed and how they've been doing since we stopped offering them. And again, the answer is they've been doing really well. Now, keep in mind, though, and I'll close with this, that past performance is not indicative of future performance, and that the results I'm showing you are from a hypothetical account. They're not back tested, though, at least after the March period that we were looking at, but they are kind of a walk forward blind on a hypothetical account. And what that means is simply that the fills are from the hypothetical account, meaning the simulated account. And so we might have had an extra tick of slippage here and there, but at some points we might have had less. And on these reports, I actually have 2 ticks of slippage, so one on the buy and one on the sell, even though we sell at the limit. And so, but yeah, keep in mind, you know, those disclaimers, and hopefully that helps. It's really the point is to just show that the quality of the algorithms that my company develops, I think, are really high. And you know, we don't even sell this NQ legacy algorithm anymore because we hit our limit. You know, once we hit our limit on these algorithms, then we stop offering them, and we basically cap them so that we don't have too many trading them. Now with the NQ, because it's the NASDAQ as compared to the S&P 500, it had a much smaller number of contracts that we were willing to sell on it, and it's because the bid ask on the NQ can be as low as 20 by 20, and if you compare that to the S&P, which has usually around 400 by 400, so we really are able to sell kind of 20 times the amount of licenses as we are on the NQ, just because the bid ask is so much bigger on the S&P, so that we can handle 100 or 200 or even 500 contracts being bought at the market without having any slippage or any increase in slippage. So, but hopefully that helps. So with our NQ legacy, you know, it's done really well since we last optimized it, and you know, we don't even really highlight that anywhere on the website. This is the first time I've really done a blog on it. And hopefully that shows that you know, that we're doing our best to just be transparent and show people kind of the quality of our algorithms. I believe that they're extremely high quality ones, and some of that is based on just the last 3 years being able to see them trade and continue to do the right thing. But just remember, they're not perfect. You know, they take drawdowns, they take periods where they don't do as well, you know, even a couple months at times. It could even be a 3-month drawdown at times, and those aren't easy. But what the data has shown and what our experience has shown is that they pull out of those drawdowns pretty rapidly, and then it's kind of, you know, usually off to the races again. But again, past performance is not indicative of future performance. Trading futures and options does involve substantial risk of loss. It's not for everyone. But if anyone out there is wondering how have the older algorithms done since we last optimized them, or since we capped them, hopefully this data helps. And yeah, so again, the reason why I have the Excel here is because I'm able to combine all 3 algorithms, where when we look at the performance reports from TradeStation on each one, it's only looking at one of the algorithms at a time. But overall, they've continued to do well, and people that are still trading this NQ Legacy package, they should be up quite a bit since the last optimization. And again, and that's also just trading one contract the entire time, so it's not compounding anything. And so potentially they could be doing even better if they were increasing contracts as the algorithms had winning months. But I think I'll close with that, and just email us if you have any questions or give us a call, and I'd be happy to show you this data on a live demo, and then also of course show you the algorithms that we currently offer, like the swing trader, which is right here, or the S&P crusher. So I'll sign off with that. Thank you for watching, and have a great day. Bye.